noisy in here, but it's fine anyway. Okay, the camera on here, so I guess it's fine to even leave this here. I hate splitting my speeches. Eh? It's tricky. I prefer to do it from the head. Mic check. Mic check. Mic check. Mic check. Mic check.
Panelists, ladies and gentlemen, Secretary for the Economics Association of Zambia, I will be your director of programs. Celebrated AFMI Index, the Africa Financial Markets Index. This is a product of the Absa Financial Markets team and the Monetary Financial Institution Framework, OMFIF. This is the fourth launch since its inaugural and debut release in 2017. The index gives an appreciation of the performance of financial markets and posture across the 23 African countries, benchmarked against 6 pillars, namely access to financial foreign exchange, macroeconomic opportunity, legal enforceability of standard master agreements, and is that it's being launched in a period that has been ravaged by disease pandemic, COVID-19. Never in history has the world seen allocation of resources towards public health care at the expense of other sectors of the economy. Africa and the world has seen deterioration in fiscal posture due to amplified effects of disease pandemic, and this is now evident in financial markets, bringing it back home to Zambia. In the labyrinth of uncertainty masked by currency shortages, currency depreciation, interest rate risk, transfer and convertibility risks, downgrades at a sovereign level, and more recently, default when Zambia skipped coupon payment on its 2024 dollar bond. Before I get carried away, at this point in time, I would like to invite the Director of Global Markets, Mr. Stanley Temele, for his opening remarks. Mr. Temele, sir.
Mr. MC, distinguished ladies and gentlemen, let me begin by welcoming you all to this launch of the Absa Africa Financial Markets Index. To begin with, let me start by recognizing our distinguished panelists that are with us here today. So I'd like to acknowledge, to begin with, Mr. Mukudi Chikuba, who is the Permanent Secretary, Economic Management and Finance at the Ministry of Finance, Mr. Chris Papadopoulos, Economist at the Official Monetary and Financial Institutions Forum, OMFIF, that has partnered with Absa in this index. He's based in London and he will be with us on this program today. Ms. Mtomboy Mundia, Director Market Supervision and Development at the Securities and Exchange Commission. Dr. Patrick Chileshe, Chairperson for the ACI, or Financial Markets Association of Zambia Foreign Exchange Subcommittee. Mr. Nicholas Kabaso, President of the Capital Markets Association of Zambia. And indeed, our MC himself, Mr. Mutsuge Zulu, who will be running with our program this afternoon. In addition to that, my Absa colleagues who are with us on this panel, Mr. Jeff Gable, who is our Absa Africa Head of Research and Senior Economist, and my Absa Bank Zambia PLC colleagues who are present with us. I welcome you all, and let me say all protocols observed. So let me start off by saying that we are very happy to be launching this version of our index, especially at this time of the year when the country has been going through various challenges which we've been navigating, not to mention the COVID pandemic, but also other fiscal and various challenges which we've been able to navigate through. So this comes at an opportune time, and it will be an opportunity for us to really interact with the panel. As you can see, this is a powerful panel that we have here, and we anticipate an excellent discussion to follow thereof. So, on behalf of Absa Bank Zambia PLC, I would like to welcome you to this launch. This report was officially launched at the World Bank and IMF annual meeting in October 2018, and that was in partnership between the Absa Group Limited and the Official Monetary and Financial Institutions Forum. The index covers a number of countries right across the African continent, and it looks at a number of pillars, and it measures market development in the financial markets area of our markets. Now, we all agree that financial markets play a very important role, and they are very wide in our economy. They're basically the driving force behind a lot of what we do, whether it's in currency conversions, whether it's in the different securities and instruments, stores and measures of value. That is what financial markets are about, and that is the importance of this particular index. So it spans across 20 countries, and we will see in the presentation that will follow that we will see over the years how Zambia has fared across the continent or compared to the other countries in how we have developed across each of these pillars. Now, the pillars themselves are 6 in number, starting with market depth, access to foreign exchange, market transparency, tax and regulatory environment, capacity of local investors, macroeconomic opportunity, and the legality and enforceability of standard markets master agreements. So looking at the pillars themselves, they basically inform the panel that we have here, the great panel that we have today. And so it should be an exciting and an in-depth discussion. So just one or two highlights from the report. We'll see in the report that Zambia rises 3 places in the measure of legality and enforceability of Standard Financial Master Agreement, which is a good move because we have risen in terms of the ranking there. The World Bank's Doing Business report gave Zambia a higher score after it was made easier for businesses to obtain post-commencement finance during business risk. Zambia ranks highly in this pillar overall due to the enforceability of closeout and netting provisions of master agreements. These are the agreements that we would use to govern the financial instruments or the products as we deal in financial markets. Zambia's ranking improves in access to foreign exchange. I think that should be an interesting part of the conversation. And this comes after commercial banks have traded about $4 billion of foreign currency on the interbank market in the period under review, excluding transactions with the central bank. So it should be another topical one that we will have to look at. Now, as I wind up, we look at the opportunity areas. We say 2020 posted real huge global challenges. We've talked about the coronavirus or the COVID-19 pandemic, which shook the entire world and had an impact on financial markets all the way through. Okay, so like many of the countries in the index, COVID-19 affected a lot of businesses right across, and Zambia was not spared in this regard. However, interestingly, in Zambia, and we will get some of that in the discussion, is we had other challenges apart from COVID-19, and a good number of them on the fiscal policy side, and we will look at them in depth. So, as I end here, just like to point out that our commitment as an industry to exceptional banking, that's providing that for our clients, and also to be able to provide banking for the unbanked, which are priorities for our central bank. Those are some of the key areas in which we focus. And as we talk through the index, some of them start to come out as in which direction are we heading, in which direction are we going. So despite the global challenges, we continue to have, as Absa, an optimistic long-term view of the country. Yes, we may be going through challenges now, but we remain optimistic in the long term in terms of the outlook for the country, and we are committed to working with all the various stakeholders that govern and make up the financial markets, some of whom you will be meeting shortly, and I have mentioned. So it is my sincere hope that the deliberations this afternoon will be found to be interesting, interactive, and exciting by yourselves. And I also sincerely hope that you will all find them to be very beneficial. I wish you all a great afternoon, and please do enjoy the session with us. I thank you.
The Director of Global Markets for Absa Zambia PLC. And one of the takeaways there is long-term optimism, and gives hope to our listeners, clients, and viewers. At this point in time, I would like to then call upon the Head of Macro Research for presentation, Mr. Jeff Gable. Mr. Jeff Gable.
Okay. yeah, as we try and catch Mr. Gable for his presentation, maybe we will try the
third place. And Nigeria, I suppose, is also a really good example, and we'll see in a slide or two, where it's possible to be really good at some stuff and really very far down the table at others. And certainly there's going to be a message around Zambia in that space as well. What we've seen are back 4 years ago when we launched this thing, only 6 countries out of the 17, so barely a third of them. On this scale that goes from 0 to 100, barely a third of the countries scored 50 or above. And right now, we're really pleased to say that of those original 17, of which 6 only scored 50 or above, it's now 14 of those 17 that are scoring 50 or above. So it's certainly the case that over the years that we've been running the Absa Africa Financial Markets Index, that scores are improving, that financial market developments are continuing a pace. And even in this very difficult environment that we launched the 2020 issue in, 9 of the last year's 20 countries, 9 of those managed to improve their scores, even in this very difficult environment. So that's very good. For Zambia, and that's going to be the thrust of our talk today, for Zambia, the 2020 index scoring sees the country's score slip by about 2 points. So Zambia's score goes from 55 to 53 in the index, and it falls 1 place to 9th overall. But over the 4 years that we've been running the index, Zambia's position has been 8th or 9th in each and every year. So it sort of highlights that even improving the score over those 4 years, little step back this year, but a broad improvement. You need to improve pretty quick to really move up the scale here very, very quickly. Now we're going to talk about Zambia's specific scoring, right, in some detail in a few moments with Chris. But first, let me just talk a little bit broadly about the scoring itself. And so in that space, I guess the first thing we want to think about are the various pillars. And you've heard already that these themes that we use, there's 6 of them. Right, and we're going to go into them a little bit more detail in a moment. So let me just talk about them broadly. So we're thinking about market depth as a theme, about market transparency as a theme, access to foreign exchange, the capacity of local investors, the macro environment, in sort of a property rights theme as well. So across that, we've captured more than 40 concepts. And in that, it's important to notice that there's the concept of a data edge. We can't always have the absolute latest data for all countries because we want it to be sort of common across countries. So where annual data is used, often it's up to the end of 2019. So importantly, that data might not reflect some of the deterioration that we know is happening as a consequence of COVID. For some market statistics where the data is at higher frequency, well, that we may have data all the way up to the middle or even July of this year. You can find a complete list of all the measures in that full report in the inside back cover, pages 38 and 39. But let me just preview that a little bit more by saying some of the data is quantitative and scaled, right? So for example, in the 4th pillar, in the theme around sort of local investors, the capacity of local investors, we think about the value of pension assets per capita. So we know pension assets in the country, that's a quantitative number. We know the population of the country, so this is straightforward quantitative scaling. Some of the measures in our index are quantitative but discrete. So for example, in the access to foreign exchange pillar, we reward countries based on whether they have secondary market makers or not. So that's a very binary thing. You got them, full marks. Don't have them, don't get it. Or capital controls. The index believe that free and open capital markets are best serve sort of the needs of the continent. So the tighter our capital controls, the weaker a country will score in that space. But it's still quantitative. Are there secondary market makers or not? Yes or no, but discrete scoring. And then some of the measurements here are very qualitative, right? So scores in relation to legal and regulatory and market conditions in the 3rd and 6th pillars are often a little bit qualitative in nature. And across the data set, we're really looking to fine-tune definitions and improve the quality of the data each and every year. And for 2020, I think we've made great strides in that space. We've had even greater collaboration with the data providers, with the regulators, with the central banks, with the capital markets associations. And I'd also like to make special mention of ISDA, who's come on board with us and provides sort of cross-country comparable data for a number of the key measures in the markets. If we think about the pillar scores, Then in that space here, and as I say, I know the font here is going to be very, very small, but we could see sort of where Zambia's showing sort of comes from, where it's 53 points out of 100 sort of derived from. And we can see in pillars 1, 2, and 3 around market depth, around access to foreign exchange, around market transparency, Zambia scores certainly in the top half of the index, and the same with the 6th pillar around sort of financial property rights. And it's really in the 4th, capacity of local investors, the depth of local assets under management, pension funds. And the 5th pillar, the macro opportunity, where Uganda has really struggled in the 2020 index. And so it's quite interesting to see there where sort of the easy gains can be made and where the competition is quite strong. So you'll be able to see this snapshot on pages 8 and 9 of the report. And I'm also really pleased that the underlying data for this, right, is also available for everyone to see. So we know we're trying to encourage open and transparent and accessible financial markets. Well, we try to make the data behind the Absa African Financial Markets Index also open and accessible and transparent. And so the page that you see in front of you right now is available on the OMFIF website, and it's clickable. As you click into a country and a pillar, you get to see the sub-scores, you get to see developments from one year to another. So before I hand off, I also want to highlight that even though Chris and I will be talking a lot about the numbers and the specific scoring, that the value in the AFME report itself is not just in the hard data, but it's also from the contributions from more than 30 individuals from sort of C-suites across the continent, policymakers and other knowledgeable experts. And we really sort of gain value from that. And you see those anecdotes and those specific references throughout the document, and it really brings a greater degree of color. And I would also say, before handing off to Chris, it's really the value in this is around the discussions that it generates. And today, particularly in the panel discussion, is a great example of how we bring together sort of this hard look at Zambia and 22 other countries on the continent where we're doing well, where we can do better, and engage with one another in order to ensure a brighter future. But my time has now come to an end. As I say, I hope to be able to see you in person in the not too distant future. But for now, please let me hand over to Chris from OMFIF to talk you through the pillar results in even greater detail. Thank you.
Thank you, Jeff. I hope I'm audible. I will just share my screen so you can see the slides. So I'll start on pillar 1. Do let me know in the Q&A chat if you can't see pillar 1. It's the pillar 1 slide at the moment. Pillar 1 looks at the size of the local market, of the equity market, and of the bond market. It looks at the liquidity of them and the financial products available. In some ways, it represents the sort of ultimate targets of all the other pillars. So you can see here, Zambia is 10th here. And what we do on these charts is we're just comparing them against the top 4 in each pillar. So the top 4 here being South Africa, Nigeria, Mauritius, and Botswana. And where Zambia does very well compared to these countries is in the product diversity. So you can see that by the dark grey bar. And indeed, Zambia has corporate bonds, sovereign bonds, equities, unit trusts, among others. It also does well in market depth, which is this sort of dark orange bar, which looks at things like the existence of market makers in different markets. Where it tends to do less well compared to the top countries is these purple bars, which represent market size and market liquidity. In fact, Zambia did drop a couple of places because of those. This was mainly due to bond market liquidity, with a turnover in the bond market dropping by about half. And you can see in this table how bond market size and liquidity compare to the top 4 largest bond markets in the index. So Zambia's bond turnover this year was 4.5% of total bonds outstanding, which puts it about 13th in the index in terms of bond market liquidity. But that is down by quite a lot from 9.5% in the previous edition of the index. And just to say as well, this data goes right the way from July 2019 all the way to June 2020. There was also a drop in equity market liquidity as well. It fell by about 40%, as did capitalization, which dropped to 15% of GDP from 18% of GDP. This was seen pretty much across the entire index. As you can see on this chart here, pretty much everywhere dropped except for the Seychelles, which has a bit of a rebranded exchange. The market respondents, the people who we surveyed, in the majority of cases for most countries, said that a lot of liquidity dried up because of foreign investor sentiment. There was basically a drying up of risk appetite among foreign investors, and that had a massive impact on some of the local bond and local equity markets. And that's what I think what we saw in Zambia as well. But overall, you can see from this market capitalization chart, Zambia roughly in the middle, probably just ahead of being just in the middle, because of course we've excluded a couple of countries such as Ethiopia and Lesotho, which don't have securities exchanges at the minute, so it's just above halfway. If I move on to Pillar 2, Pillar 2 looks at the openness to foreign investment based on the ease of moving capital and the liquidity of foreign exchange markets. Zambia here is 7th. You can see it scores very highly for exchange rate reporting. That's the big orange bar at the top. That's because Zambia has a sort of a single exchange rate system. So you have multiple exchange rates for different currencies, but each one is the same for foreign investors as it is for local businesses. And the exchange rates are reported daily on the central bank website. Anyone can check them and they're up to date. So that's very good. It also does well for interbank foreign exchange turnover. It does relatively well for it. It's this dark purple bar. I'll just go a bit more into that. It was one of the reasons why it climbed one place in Pillar 2 this year. The amount of foreign exchange traded between commercial banks, and that's excluding what's traded with the central bank, rose to $3.8 billion. And that also covers the 12 months to June 2020. This was up by about 50% compared with the previous 12 months and put Zambia at about 8th in the index. But what it shows is a liquid domestic foreign exchange market where commercial banks are not necessarily over-reliant on the central bank for foreign exchange. And it's also useful because prices that are determined in the interbank market can be used as a basis to price other things like foreign currency derivatives. So it's quite a useful foreign currency liquidity indicator, which Zambia is doing quite well on. The other Pillar 2 indicator that improved for Zambia this year was portfolio flows to foreign exchange reserves. So foreign exchange reserves were not much changed for Zambia between the end of 2018 and the end of 2019. Net portfolio flows relative to reserves did drop, which means that on this indicator, Zambia was in a better foreign exchange position at the end of 2019 than it was a year before that. You can see how Zambia ranks in that indicator on this chart here. And of course here on this chart, lower bars are better. So you want to be towards the right-hand side of this chart rather than the left. I'll just skip on to Pillar 3. So Pillar 3 looks at regulatory frameworks, the overall market environment in terms of tax systems and transparency. You can see Zambia here doing very well on things like reporting and accounting standards, which is this dark purple bar, which is as high as all the top 4 countries. That's because that looks at the adoption of IFRS accounting standards across different types of businesses. It also does well on financial information availability. So that's looking at listed companies and how they report their publicly available accounts and whether that's done regularly and on time. It has a slightly lower score compared to the top four for financial stability regulation, and to get a maximum score there requires full implementation of Basel III. And Zambia also gets a slightly lower 4 than the top 4 for its tax environment. But I'll just go a bit more into the tax environment onto the next slide, because it's quite interesting in Zambia. Compared to the rest of the index, Zambia has relatively high base levels of withholding tax rates for dividends and interest at 20% each. But what it has is it has some cleverly placed discounts that do encourage a capital market development. So, for example, dividends paid to individuals from firms that are listed on the Lusaka Stock Exchange are exempt from withholding taxes altogether. And while the rates may be generally high, Zambia has tax treaties with 22 countries, which is the 6th highest in the index. This table shows the countries in the index with the highest number of tax treaties, and Zambia is 6th there. And of course, these tax treaties reduce the incidence of these taxes, in some cases by quite a lot. So Zambia has a tax treaty with the United Kingdom, for example. So if a bank or an asset manager were building a portfolio and lending money to Zambia or acquiring Zambian assets, it wouldn't be paying these withholding taxes. It'd be paying something like 5% or 10%, so much lower. So it's got some. Well, the overall tax picture is one of sort of high taxes. There are cleverly placed discounts in there that help to encourage development. Another area where Zambia is slightly below the top 4 is in corporate credit ratings. Zambia has 3 corporate ratings from the international ratings agencies. So that is 2 from Fitch, 1 from Moody's, and then none from Standard & Poor's. Starting this year, we've started including ratings from local ratings agencies. And there's one, the one we've included here is GCR. There are other African rating agencies. There's 2 in Nigeria, but they are solely Nigeria focused. But GCR has coverage of 4 companies, 4 private sector companies in Zambia. And this is something we're going to keep an eye on in future versions of the index, because the regional ratings agencies could play a big role in improving transparency and bringing more foreign capital in. And they've got a sort of much better local presence than the big 3 international ratings agencies. So if I move on to Pillar 4, this looks at the capacity of local investors, and the focus here is very much on the size of local pension funds. We're trying to look at institutional assets here with a very long-term investment horizon that can really drive and play a meaningful role in capital market development and providing that domestically sourced capital and liquidity. Zambia is 22nd in here. If I move to the next slide, you can see its pension assets per capita. It's got $26 of pension assets under management per capita. You can see it's in this group sort of from Lesotho downward. Pension fund assets per capita are all sort of below $100. But there is a lot of growth going on in this group of countries, including Zambia, because pension systems are being rolled out to across the public sector, private sector, and informal sectors. And in Zambia, if you take a closer look at it, pension fund assets have grown from 4.5% of GDP in 2015 to 5.6% of GDP last year, and that of course is impressive because the GDP denominator in that formula has been growing as well by between 3% and 4% per year. So there is promising growth there in Zambia's pension industry. We also look at pension fund AUM as it compares to the size of the local bond and equity market. Zambia is quite low down on this. pension fund assets are equivalent to 6.6% of the listed market. The index average is about 51%. So pension funds perhaps not in the position where they can provide a really meaningful and robust boost to capital market development. Move on to Pillar 5, which is all about macroeconomic opportunity. That's looking at economic growth, exports, and the banking sector, and things like external debt and financial sector transparency, policy making transparency especially. And you can see on this main chart, compared with the top 4 countries, Zambia does just as well in things like monetary policy transparency. So, and anybody can go onto the Bank of Zambia website and can look at the latest decision, the thinking behind that decision. They can see a calendar of future decision-making events. So the monetary policy-making process is very transparent in Zambia. Also look at the release of the latest budget published. Does it come with financial breakdowns? And Zambia does quite well there. Where it does sort of medium is in the quality of banks. The data edge, this is looking at non-performing loans for the end of 2019. So it doesn't quite cover into the pandemic. But the non-performing loan ratio in Zambia is something like 10-11% of gross loans, which is about the index average. So it's about in the middle there. Where it's done a bit worse this year, in the ranking is partly due to economic growth. So these are the forecasts made by the IMF in the sub-Saharan forecast in June. So they probably would have changed a bit since then. But Zambia grew 3.2% on average between 2014 and 2019, and that's on the compound annual growth rate basis. And it's expected to grow or to contract 2% on the same basis over the next 2 years. And that is largely due. The main discounting factors in this forecast were how dependent the country was on commodity